So in the beginning, it really was as simple as I like it, I use it, I'm going to invest in it. As I became more involved and learned a lot more about markets, you kind of realize that just because you like something and you use it doesn't always mean it's a good investment. There's a lot of things like Peloton or Snapchat that people love and they use, but the stock isn't so great.
What's the best way for individual investors to make a fortune in stocks? My guest today has made it his mission to find out. His name is Kenneth Suna, and he is a self-taught stock trader, an investor, and a finance content creator. He goes by the account Trade, Invest, Simplify. I like the Simplify especially on TikTok. And he's also a neighbor. I'm here in the Washington, D.C. area, and he is also a Washingtonian. So Kenneth, fellow Washingtonian, welcome.
Thank you. Thanks so much for having me.
It's my pleasure. And we were speaking previously, you have one of the most interesting, perhaps the most interesting origin story as an investor. You used to be a professional wrestler. Can you walk us through how you got from that to this?
Sure. I've always wanted to be a pro wrestler ever since I was a little kid. And I was lucky enough to have a mom who supported that dream, even though it's terrifying. She realized you're only young once, and school and all of that can always be done later. But you can't always be a pro wrestler in your 30s and 40s. So she encouraged it. And on the first day of class, long before I ever made it as a pro wrestler, I broke my back. So I came home, no plan B, didn't want to go to school just to go to school without having any direction. I had tunnel vision. All I wanted was to be a pro wrestler. So I thought, well, I'll work for a little and I'll figure out what I want to do. And I worked in the restaurant industry. I worked in the fitness industry. I still wasn't figuring out what I wanted. And around that same time, some guys at my gym were very interested in the stock market. And of course, like listening to strangers at the gym is like listening to strangers on TikTok now. So I made a lot of bad financial mistakes, copying trades that I shouldn't have been in, penny stocks, high risk stuff. But it really kind of all goes back to my grandma, who was very into investing, and my mom too. And so I kind of already had that interest in the stock market and was learning all the wrong things to do. And I read some books and I taught myself, and here we are.
Expensive mistakes, I was going to say, are the best teachers. And it sounds like that's how you learned. And that, again, it's an amazing origin story. And I want to share a weird little tidbit. I don't have a personal Facebook account, but I have a kind of a business one from a dance fitness business I had invested in a long time ago. And I used it to check ice climbing conditions. Super weird. But somehow, the Facebook algorithm thinks I love professional wrestling. And maybe it's because I've started to read these stories of professional wrestling now. So it's sort of a self-reinforcing thing. So like, I know a lot about professional wrestling, much more than I thought. And there's real art to it. I mean, sure, people perceive it as this kind of this lowbrow, type of thing, but there are some really, really, really big thinkers that have been wrestlers, and there's there's some not. I mean, there's just all kinds. So it's quite an interesting side of humanity, much deeper than I would have expected.
For sure.
Enough about me, Kenneth. Enough about me. Let me do a quick lightning round just to humanize you to the audience. No need to overthink these. These are just really quick questions. Last book you read?
Last book I read, I can't even remember the title, but it was one of those beach reads. It's a whodunit. An artist goes into a Great Depression, doesn't speak anymore. There's a murder, and I can't remember the name, but I'll get it, and you can maybe put it on the screen or something.
Interesting. It sounds like an airport bookstore kind of thing too. Yeah, exactly. Last music you purchased, or do you have like a streaming service?
I have a Spotify account.
Gotcha.
Yeah.
I'm like from the last century. I don't have that. Best investment and worst investment.
Best investment would be actually WWE, if you can believe it, which is now TKO. And worst investment would be Jones Soda.
Gotcha. Jones Soda was so hot. It was so hot until it was so not, right?
Yeah, for sure.
Yeah. So how do you invest, Kenneth, in a nutshell?
Well, actually, the way I invest is I buy what I love. That's always been my strategy. Even long before I knew really what I was doing, if there was a company that I was a big fan of or a product that I used a lot, I just automatically made the connection to the stock market. And like, if I love this computer, maybe I should invest in it. Or if I love this product, like I did with WWE, maybe I should invest in it. And so that's where all of my best investments came from. I use this. So Apple, Netflix, Amazon, WWE as a lifelong pro wrestling fan. Kava is my latest investment. Because it's local here. I go there all the time. And when I heard they were going public, I jumped.
So let me ask you this, because Buy What You Know and Love is famous from Peter Lynch, who ran Fidelity's Magellan Fund. I think he returned like 29% annually while he was doing that. It makes intuitive sense, right? Because you know the stock, you know the company.
Sure.
Does it not, though? Does it not predispose people to investing in retail businesses primarily? Because that's what we mostly interact with as regular people. We don't know about sewage pipelines or some, transformer parts, or there's a lot of nitty gritty things that we don't rub elbows with in daily life. Are you just okay to miss those?
No, but I think it opens up your way of thinking. So it's something generally that I think brings you into the market. If you're a new investor outside of the foundation of like an S&P 500 index fund and a tech-based fund and a dividend fund, when you start getting more interested, people always say, well, I don't know any stocks. And I start saying, well, what do you like? If you wanted a latte, where would you go? If you wanted a Big Mac, where would you go? To your point, is mostly all retail or fast casual kind of restaurants. But once they start thinking, then they start thinking, well, where does my electricity come from? And where does my garbage go? And who does this? So a lot of people have said, like, the garbage truck comes down their driveway every weekend and it says waste management on it. And they start thinking. So it is one of those things that just kind of opens the door to thinking more broadly. And then all of a sudden people are looking at things and they're in the hospital and the machine is 3M and they're like, oh, 3M, I wonder if I can invest. So it does kind of open up their way of thinking.
Yes, that's a template, and it's certainly far better than the inverse, which would be jumping into random stuff that you really have no idea about, right? And just buying that. So you want to learn how to know about something first, and then kind of like a Christmas tree or a tree, you gradually expand. Now, if you were on an airplane in front of me, Kenneth, and you're monitoring your portfolio, and I'm being nosy and peeking through the cracks, roughly speaking, what am I going to see?
You're going to see a lot of big tech. So Apple, NVIDIA, Amazon, Tesla, which some people say is a tech company and some people say isn't. You'll also see some smaller speculative investments as well. Kava, for example, which I wouldn't necessarily say is speculative, but they are kind of newly public. And then there's some much smaller positions in my portfolio on like Archer Aviation, which is going to be like, for people who don't know, it's supposed to be like an electric vehicle that can fly, and it's like little helicopters that can get you from a place in New York to a place in New Jersey in like 30 minutes, and they're electric. And I think that's kind of interesting, but I also think it's very high risk. And what are the regulations going to be like for these flying EVs? And so maybe I buy a little bit of that too, just to kind of roll the dice, but nothing high risk. I'm not going crazy. No life savings in a lottery ticket.
If you had a conceptual bazooka and you could just blast one investment style off the planet, what would that be?
One investment style
that you don't like, yeah, and you think is bad for humanity, let's say.
Sure. The surge of copy trading and copy investing. Mm-hmm. Not a big fan. Here's what Nancy Pelosi bought last week, and then everyone rushes into it. Or, when NVIDIA made that very small investment a couple months ago in SoundHound, everyone went nuts, and they were like, "Oh, I'm going to get rich because I'm going to copy NVIDIA." NVIDIA made it really small. I mean, it was under $4 million for a $2 or $3 trillion tech company. They only put in a really small amount. But people rushed to buy it. So copy trading, copy investing makes me kind of nervous because it really doesn't teach anyone anything.
Just because they go jump off a cliff doesn't mean you have to. Right. And conversely, if you could inject, metaphysical steroids, let's say, into some of your investing abilities that might already be like pretty good, but you wanted to make them even better, what would you enhance about yourself? About
my own investing strategy? What would I enhance?
What would you double down on? Like what skill sets, what talents would you double down on as an investor? What do you think has gotten you this far?
I think I have a good eye for recognizing what's going to work and what isn't. So Peloton, for example, I was always kind of weary about that stock because it was so expensive. The bike was $3,000. The subscription was, $60, $70 a month. And I got it in the moment of COVID. And I thought, oh, well, it's very popular now, but this is going to be an expensive clothing rack in a few months, when people get back to going outside and going to the gym. And so everyone was rushing into Peloton, and I was going, this makes me a little nervous because it's a luxury item that people want to have and show off, but I don't know if it's going to have staying power. So I was able to kind of avoid falling into the trap of like, this is hot right now, so it's going to be hot forever. And then there are companies that I recognized right away, like Kava or like a Chipotle from years ago, that I thought, oh, this has good staying power, and it's popular, and I like it. So I'm of the mindset of, if I like it, and I don't like a lot of, big brand kind of things. I'm a minimalist. So if I like something, I feel like that gives me an edge because I like it, and I don't really like a lot of stuff. So
How
it
much
makes me
stock?
intrigued at the very least.
Gotcha. Makes sense.
Yeah.
How much weight, how much credence do you give to this idea that has popped up with Robinhood, the GameStop era, which is kind of when some of your social media accounts came of age, I understand, that the retail investors now have an economic power to control the market. Like, as we're recording this, DJT, the Trump media, meme stock, basically, it's gone down a bit, then it went up a bit. I don't know what it's going to end up at, but the company has many billions of 5 billion market cap, and I think the revenue is comparable to like a busy McDonald's or like 1.8 7-Eleven stores. I mean, basically no revenue. It's all on retail investor desire. We saw that with GameStop. We saw that with AMC. It's relatively it's not totally new in the markets, but it's new in the size that we've seen it. Is that here to stay? Is that something to believe in, or is that just kind of an ephemeral thing?
I think it's probably a little bit of both. I think it's going to cycle in and out of what's popular and what's hot. So I think a lot of people came into the markets because of AMC and GameStop, and even Dogecoin, the cryptocurrency, brought in a lot of people who probably an overwhelming majority thought, I'm just here to get rich. And when they didn't get rich, they went, the stock market's a scam. I'm not into it. And they left. There was probably a small portion of that who came in because of AMC and then found that they really liked it. And they've been learning a little bit more about how to invest. And I think it'll probably come in waves. When there's a big new cryptocurrency that everyone's really excited about, they'll come flooding back in. And then if it works, a couple of people make some money and most people won't. And then they'll leave, and then something else will happen. I think it's going to be kind of cyclical and based on popularity of whatever's going on.
If we could do a Charles Dickens experiment regarding Kenneth as an investor, let's pretend when you're new to investing, stock ABC came across your desk. Like, what would you do? What kind of homework, what kind of research would you do in arriving at a decision to buy? What do you do now? And where are you looking to go directionally in the future in terms of your analysis?
Sure. So in the beginning, it really was as simple as, I like it, I use it, I'm going to invest in it. As I became more involved and learned a lot more about markets, you kind of realize that just because you like something and you use it doesn't always mean it's a good investment. There's a lot of things like Peloton or Snapchat that people love and they use, but the stock isn't so great. So over time, I was able to look a little bit deeper into the fundamentals of a company and really understand their growth, their cash flow, net income, if they're paying down their debt, if they have a dividend, if the dividend is increasing, even looking at something like a payout ratio, like how much of their income are they giving out in the dividend? If I'm looking for long-term dividend growth and the payout ratio is 70%, maybe they're not going to be raising that dividend so much. And if that's why I'm buying it, maybe I don't buy it. If I'm buying it because I think it has a good dividend and some good growth, then maybe I would buy that. Right now, I don't really, I don't know really where I go from here in terms of my analysis for stocks. I've found what kind of works for me, and I like it. And I've also, and now seems like a good time to plug my website. I have a template that I've designed that's totally free, and it kind of goes over everything that I look at. Like just like we were talking about, revenue over the last couple of years, debt, cash flow, if they pay a dividend. And it is really just like, this is what I use. So I've put it on my website for anyone to download if they want it. And it's free.
That's great. I like that. And investing is really a system, ultimately. Sure. Yeah. It's not a feeling, and it's a system consistently applied over time. Otherwise, it's luck, right? It's a pattern recognition system is really what it is. So dialing down your own decision process and sort of encapsulating it or articulating, I think is very important. And even now, I've been a professional investor for 25 years, roughly. I'm still trying to get better at that. I mean, I could improve a lot. Let's say you had, let's say it's not you. Let's say you had 100 fans of your social media accounts in a room, and let's say those are mostly newish investors. Last year or two, they've started investing. What sort of like 3 pieces of advice, positive or negative, would you give them?
I would first, well, I can't give financial advice, but I would urge them to consider index funds, especially if they're new. I think a lot of new investors come in asking, what's the next one? What's the big one? That's a great way to get to lose a lot of your money. The best thing I think is start with a really solid foundation of index funds. It's simple, it's easy. Not a lot of work really has to go into it. It's an S&P 500 dividend tech, maybe a real estate investment trust if you wanted, and that's really it. And then it would be from there to be consistent and not feed into the fear that they see on social media. Social media is great, and TikTok is a great place for people to come and learn about how to invest, but it's also a great place for people to stoke fear and really freak people out about the state of everything. And some of these content creators know exactly what they're doing. And they really are just doing it because they get a lot of engagement and a lot of followers. And it's fun for them to say everything is ending next week and it's all over. And it scares people. So my advice would be tune that out as best as you can. Stay consistent and focus on your core 3 or 4 investments. And outside of that, smaller positions can be added in individual stocks if you're inclined, but it's not mandatory.
Yep. Yeah. I agree with that. Indexing is enough. If that's all you want to do, you're buying into the long-term value-adding power of humanity, and humanity has been pretty good over time at adding value. In fact, exponentially good. We've had more progress in the past 100 years, probably than the past 100,000 years before that, I would argue. So, let's bump this up even bigger. A couple of years ago, speaking of GameStop, we saw a GameStop congressional hearing. I would call it more political theater. A lot of people asking questions they probably didn't understand themselves or just wanted to look like they're coming in, taking a sucker punch at a GameStop. And I'm not absolving, Robinhood hearings about the GameStop saga. Robinhood CEO Vlad was really in the hot seat. And there were some legitimate questions, and there were some attempted sort of grandstanding sucker punches as well. If Kenneth Suna were a regulator of some sort, what sort of low-hanging fruit would you harvest to make investing in the U.S., the investing ecosystem, more friendly, more conducive to the success of individual investors?
That's a really good question. I would, I think I would probably streamline the process. There's a lot of taxes involved that people don't understand. There's a lot of different options. I think it would probably be more something in terms of like easier to understand layout on these financial brokerage websites, because I'll get DMs from people who think I'm tech support and they're like, I don't understand this. What's this question? What's it asking me in terms of, setting up a Roth IRA versus a traditional IRA? And even if you go on some of these websites, they don't really break it down in a clear fashion as to what it is. So I think it would be more, what I would do would be more in terms of like streamlining the process, making it just easier to understand, and probably offering, I know a lot of states already offer this, but some sort of financial education in school, which I don't know if that's regulatory like what you were asking, but that's definitely something I would try to focus on.
It absolutely should be a thing. I mean, our education system in the West is modeled after a few hundred years ago, what was taught to European aristocracy when you didn't need to work and you wanted to learn about the humanities and the arts. And I'm all for that. Nothing wrong with that. That's great, right? But you need to know the practical stuff too. And we're graduating kids who don't, right? And that's also, I think, indirectly why we're so weak in STEM. So you touched a nerve there, and I am very much with you on that point.
I do think we need more of a hybrid approach. I mean, like you said, science and art and history is also very important, but finances too. And learning how to do some basic things around the house is important too. And that's kind of neglected, but also you need really good teachers. Especially here, how many people take Spanish as a second language, and now as adults they haven't maintained or retained any of what they learned. So I think you need to teach investing and some basic finance courses in school, but if it goes the way of some boring teacher who just points at a board and says, remember these things, it needs to be more engaged.
Yeah, a subject is only as good as the teacher teaching it, and a good teacher can make an incredibly boring subject
Yes.
very interesting. And I've seen that before too. Things I never thought I would care about in all my life suddenly came to life in the hands of a good teacher. Totally agree. So if someone says, Kenneth Suna, you seem like my teacher. You are someone I want to follow in investing. I want to learn more. Where exactly do I go?
You can find me on TikTok at Trade Invest Simplify, also on Instagram under the same exact handle, and YouTube is youtube.com/Kenneth Suna. And that's primarily where I am. And my website is just my name, kennethsuna.com.
So either Trade, Invest, Simplify, or kennethsuna.com. Both of those roads will lead to Rome. Kenneth Suna, thank you so much. You've been generous with your time, and I've certainly enjoyed this chat. And thanks, as always, to you guys for watching us at home.
Thank you. Thanks, James.